The headlines are screaming. Hedge funds add Microsoft Netflix in position shuffle, 13F wrap. But what does this truly mean? This isn't just a simple portfolio adjustment. This is a deep, complex, and highly strategic repositioning by the world's most sophisticated investors. We're going to go far beyond the surface level reports and explain why this news, sourced from the latest SEC 13F filings, has profound implications for global markets, especially for the United States, and what it signals for the future of technology, AI, and even the crypto sector. First, let's understand the context. A 13F filing is a quarterly report required by the US Securities and Exchange Commission, SEC, for all institutional investment managers with at least $100 million in assets under management. These filings provide a snapshot of a fund's long positions in publicly traded securities as of the end of the quarter. Think of it as a peek behind the curtain of the financial wizards, the titans of the hedge fund world. They are a treasure trove of information, revealing where the smart money is placing its bets. This quarter's filings, however, are particularly revealing. Our deep dive into the data from the Q2 2025 filings shows a significant and calculated move by hedge funds. While a cursory glance might suggest a simple shuffling of positions, a more granular analysis reveals a powerful convergence of capital into a specific theme: AI, cloud infrastructure, and the underlying tech stack that powers it. Let's start with Microsoft. The data indicates that hedge funds have not just maintained, but in many cases significantly increased their positions in Microsoft, MSFT. According to our analysis of multiple filings, Microsoft's net weight in top hedge fund portfolios has climbed, with some funds making it their single largest position. This isn't a surprise. Microsoft is not just a software company anymore. It is a linchpin of the AI revolution. When hedge funds pour money into Microsoft, they aren't just betting on Windows and Office. They are making a massive long-term bet on the future of artificial intelligence. Microsoft's strategic investments in OpenAI and its integration of advanced AI models into its entire product suite, from Azure cloud services to its Copilot assistant, make it a central player. Hedge funds see the exponential growth potential in Azure as the foundational infrastructure for a new era of computing. Every major company, every government, every startup that wants to leverage AI at scale is going to need a robust, secure, and powerful cloud platform. Now, Microsoft's Azure is a front runner in that race, and hedge funds are positioning themselves to capture that value. This investment isn't just about Microsoft's balance sheet. It's a bellwether for the broader tech sector. The sustained and, in some cases, increased concentration in MSFT suggests that institutional investors are not scared away by valuations. They believe that the growth trajectory for these AI enablers is still in its early stages and that the risk-reward profile remains highly favorable. This signals a continued flight to quality and a strong conviction in the dominant technology players, which could put pressure on smaller, less established tech companies who are vying for market share. Now let's talk about Netflix. The narrative around Netflix, NFLX, is more nuanced and, in many ways, just as telling. While some funds have been reported to have trimmed their positions, others have initiated or added to new, smaller stakes. What we've seen is a strategic reassessment. The old story of Netflix as the dominant streaming service is being replaced by a new one, a data-driven, advertising-supported entertainment behemoth. The addition of Netflix by some of these funds is a bet on the company's ability to successfully navigate the hyper-competitive streaming wars. It's a wager on the efficacy of their new advertising-supported tiers and a recognition of the value of their massive global subscriber base. But more importantly, it's a bet on the power of their data. Netflix's ability to collect and analyze user data to create content and personalize the viewer experience is a form of AI in itself. Hedge funds are looking at the long-term potential of this data moat and the company's newfound revenue streams. When we combine the hedge fund activity in Microsoft and Netflix, a powerful pattern emerges. These aren't just arbitrary stock picks. They are two different sides of the same coin. A bet on the enduring power of data, cloud infrastructure, and the intelligence built on top of it. One is an infrastructure play, which is Microsoft, and the other is an application layer and data moat play, which is Netflix. So how does this affect the global markets and especially the US stock market and stocks? First, it signals a consolidation of capital. When hedge funds, with their multi-trillion-dollar war chests, focus their investments on a handful of mega-cap tech stocks, it can create a powerful feedback loop. Their buying activity drives up prices, which in turn attracts more retail and institutional money, further inflating valuations. This crowded trade phenomenon can lead to an increased market concentration, where a small number of stocks are responsible for a disproportionate amount of the S&P 500's performance. For the average investor, this means that the health of their portfolio is increasingly tied to the fate of these few dominant companies. Second, it affects market sentiment and volatility. The 13F filings, though backward-looking, are a powerful psychological tool. When the public sees that a revered fund manager like a Ray Dalio or a George Soros has made a significant move, it can create a ripple effect. Smaller funds, retail investors, and even other institutional players may follow suit, believing they are getting a glimpse into the future. This herd mentality can lead to periods of high volatility, as crowded trades are prone to rapid unwinds if sentiment shifts or if a negative headline emerges. Third, the long-term implications are profound. This isn't just about a quarterly earnings report. This strategic positioning is a validation of the ongoing digital transformation, increasing importance of AI and cloud computing. It means that hedge funds believe that the companies with the best data, the most powerful infrastructure, and the most advanced AI will continue to outperform. This has a direct impact on capital allocation across the entire economy. Money will flow away from legacy industries and into these AI native or AI enabled companies, creating a K-shaped recovery where the tech sector thrives while others struggle. But let's not forget the bigger picture and the connection to the crypto and blockchain world. The hedge fund thesis for these tech giants is based on the idea that they will control the digital infrastructure of the future. This is exactly what the proponents of decentralized technologies are fighting against. When you look at the hedge fund bet on Microsoft and its cloud dominance, you are looking at a bet on centralized infrastructure. The crypto and blockchain ecosystem, by its very nature, is a bet on decentralized, permissionless, and open source infrastructure. The narrative is, we don't want a single company to own the cloud. We want a network of thousands of nodes to power the future of computing. The hedge fund positions are a stark reminder of the tension between these two competing visions. While the smart money is currently doubling down on the old guard, the potential for disruption from the blockchain and AI space is immense. We are seeing a new wave of crypto projects that are building decentralized cloud computing platforms, decentralized data storage solutions, and even decentralized AI models. These are direct competitors to the likes of Microsoft Azure and Amazon Web Services, and their value proposition is compelling, which is lower costs, greater security, and no single point of failure. This is where the savvy investor must look for the next alpha. The hedge funds are playing the current game with the current rules, but the next generation of billionaires will be made by those who can identify the decentralized platforms that will eventually challenge and even replace these incumbents. The 13F filings are a lagging indicator, a snapshot of where the money was 45 days ago. The real question is, what are these funds doing now? Are they exploring and investing in the nascent but rapidly growing decentralized AI and cloud projects? Are they starting to see the potential for a paradigm shift? The truth is, the most forward-thinking funds are likely already there. They are just not required to disclose it yet. To conclude, the hedge fund position shuffle into Microsoft and Netflix is more than just a headline. It's a strategic vote of confidence in the AI and data economy. It has the potential to create a powerful market feedback loop, consolidating wealth and power in a few mega-cap stocks. It reaffirms the dominance of centralized tech. But for those of us watching the crypto and blockchain space, it also highlights the immense opportunity for disruption. The battle for the future of the digital world is being fought in the cloud, and the outcome will determine which vision, centralized, or decentralized will ultimately prevail. Thank you for watching.